you have to take into account where they're at financially and what they might be facing coming up in 2022, because I think, frankly, 2022 is going to be a much rougher year than 21 for many farmers. So it's time to get your house in order.
Ladies and gentlemen, farmers, ranchers, and distinguished guests, thank you for listening to the Farm4Profit podcast, where we discuss the latest ideas, methods, trends, and techniques available to help your farm achieve higher levels of farm profitability. The Farm4Profit podcast is co-hosted by Tanner Winterhoff, the Iowa Bankerman, and David Whitaker, the Iowa Land Guy, where in tandem they will share their ideas and advice from industry experts. Thank you again for listening to the Farm4Profit podcast. Remember, if you aren't farming for profit, you won't be farming for long. And now, here's Tanner and David.
Hey listeners, welcome back to the Farm4Profit podcast. This is Tanner Winterhoff.
And this is David Whitaker.
Thank you for joining a Farm4Profit episode. You know that's different by now, that we have our What's Working in Ag segment and a general topic today, where the next episode in your queue or next week will be a Farm for Fun show, talking to somebody in agriculture and having that happy hour spinoff of our regular show, Dave.
Yeah, definitely. We want to thank all of our guests for suggestions, topics every week. You keep send them to farm4profit LLC at gmail.com. Make sure to like, rate, review, share everything there. We graciously appreciate you helping us grow our audience.
Absolutely. And those reviews are key to what we've got going on. So we want to make sure we let you know how important those are. Our listener review today is brought to you by Outback Wraps. Remember our good friends at Outback Wraps, the industry leading hydraulic hose labeling system. So they are the perfect gift for any farmer. If you're struggling to figure out what that farmer wants this year, go out to outbackwrap.com. Use code FARM4PROFIT, that's the number 4, you guys all know that, to get 20% off at outbackwrap.com.
And Tanner, our review this week is coming from Good4904. So thank you, Good4904, on Apple Podcast. Great podcast. I drive a feed truck and get bored listening to the radio. Love Farm for Fun episodes. Keep up the good work. Pete. Thanks, Pete.
Yeah, thanks, Pete. And that's our goal, is to not make this boring. So we're going to see today, once we jump into our What's Working in Ag segment, if we can be entertaining again. So let's roll right into that, Dave.
Today we have growers.ag.
Yes, so Growers was founded by CEO Stephen Valensin. He was the founder of Growers over a decade ago because he saw an opportunity to push technology forward in the ag industry. Growers is a software data analytics company designed for the farmer's trusted advisor. So we're looking for the people that are serving our listeners as the farmers, and you out there listeners that are the ag retailers. So this could be agronomists, ag retailers, crop consultants, and more. But Stephen and Growers have taken it one step at a time since 2010 through today to see what their product can do for the ag industry. So he's here to tell us a little bit more about what they've got going on. So welcome to the podcast, Steve.
Yeah, no, thank you for having me. I really appreciate it.
Welcome. Tell us a little bit about your tie to agriculture, or where you grew up, or how you got into this part of the business.
Great question. So, I usually explain this. I've been involved in agriculture literally my entire life, except for a brief stint in the military, but was born on a farm in southeastern Washington state, and then ended up moving kind of early in life to southeast South Dakota. So I grew up in Yankton, and then ended up on the East Coast, where I went to school for agronomy and business at NC State, and then actually started a soil testing lab was my first venture out of college, and then from that grew, created Growers, and then I started farming here in North Carolina. So I'm fortunate enough to say I've been involved in production agriculture literally from coast to coast, and haven't ever gone away from it.
Yeah, no kidding. That's pretty good perspective.
Yeah. So Tanner, what I heard in the bio was the word data, which is one of my favorite words because I like data. And so you are utilizing data for your product, correct?
That's correct. Yeah. Right now we're, collecting sales and purchasing information, right, to help really give visibility into the executives and management at ag retail and how their sales teams are performing, how their products are performing, and, ultimately help them position and place products better for their farmer customers.
What do you call that product?
It's called Growers Rally, and it's a product that it's been on the market for just a year. In fact, we're doing our full commercial launch next week, which would be basically the first week of December 2021.
Nice.
But yeah, it's been something that we've grown, been through a couple iterations over the past couple of years, and we launched this one in a beta version in November of 2020, and kind of grew it and launched it in a couple different areas in the country, and had multiple ag retailers that have been using it and testing it and giving us feedback on it, and really exciting because next week we're going full commercial with it. So looking forward to that.
So Stephen, I'm a pretty simple guy. Dumb this down for me in blue collar terms and tell me exactly what your software does.
Yeah, great. Okay, definitely. So Growers Rally is a platform that agricultural retailers use to better organize and manage their entire business.
Okay, so if I sell seed, then you have an app, or is it a computer program?
Yeah, it's both, right? So you can use it on the web, you can use it on a tablet. So it's, kind of works how ag retail works, right? Which is in the office or in the field. If you're a salesperson, right, you're using it to better organize and plan sales, fertilizer, and chemical orders with your customers, digitally engage with them, and really create a what I would consider a top-notch professional experience. Whether your business is more transactional in nature, right? Is that like seemingly kind of there's a large portion of ag retail that fortunately or unfortunately is going that way, or whether you're trying to differentiate yourself with value-added services and really try to sit down with your customers and help create plans and budgets and really organize and optimize every single one of your farmers' purchasing decisions. What's more, though, is that by a sales team utilizing this information, this data is funneling back upwards into the organization and giving executives and management at ag retail what I call a single view of the customer, right? So understanding what they have done past, present, and what they will do, or what we're planning for them to do, or forecasting that they'll do in the future, which brings a whole lot of visibility into inventory challenges and sales team performance, and basically anything that revolves around that customer and ag retailer relationship is captured inside of Rally. And so besides managing it in spreadsheets and notepads, which is a way a lot of business is still done today, it brings just a very, very professional, easy experience for kind of everybody in the ag retail organization. And like we mentioned, I think right at the beginning, ultimately the farmer is the one that benefits, because he's getting better service from his retailer. So we feel very proud that we've cultivated this like mutual win-win between farmers, which is something that I'm particularly passionate about, because having been a farmer myself and had to have gone through this experience, this is one of the ways that we kind of identified that maybe there's room for improvement here, and it seems to be striking the market at a time where the concept of digital engagement with farmers is like a fairly common language now, and everybody's sort of looking for a way to differentiate themselves, create a competitive edge, and ultimately gain efficiency in their business as there's erosion in margins. The only thing that a lot of ag retailers are turning to is like, how can we service more customers more efficiently? That's the one of the big problems that Rally's solving.
Yeah, I like that a lot. The value added portion of it is something that the bank that I work for has really put as a differentiator for our business. Our line of work is you can't race to the bottom on price all the time. You're not going to win. So the value add goes a long ways. And then our other co-host Corey, who's not here today, was just talking with some of his sales team as he works for seed retail, just how hard it is to keep track of things while you're also farming and you're also doing a podcast and you're also selling seed. So I could see to where this is going to benefit. And then the last thing that I might be reading too much into it is if this makes a sales team or an ag retailer more efficient, that should cause savings that then gets passed down to the farmer eventually also.
Yeah, absolutely. And you mentioned something when you mentioned about the seed dealership that's probably important to point out, because with everybody trying to find ways to extract value from multiple different places in the agriculture supply chain, like the management of rebate programs and bundling of products has gotten increasingly complicated, and that's an extremely hard thing to keep track of and keep organized. It's hard for sales teams, right, to manage appropriately, and there's a lot of money left on the table, I think, every year from a farmer standpoint as well as an ag retailer standpoint. So that's also kind of a unique thing that this product, Growers Rally, allows retail to do, is organize these programs into we call it a program internally because that's what it is, but it's everything that you need, right, to be eligible for X amount of reward dollars. And what that does is it basically eliminates all of the different errors that could come into play when you're trying to match the right product at the right on the right amount of acres. And it ultimately is helping ag retailers position those programs a lot more effectively in front of farmers, which again, at the end of the day, means there's, rebate dollars that end up in the farmer's pocket.
I gotta say
that's one of the big ways we're seeing savings.
I gotta say it. I say it every time. Data is the currency of the internet. Data is the currency of farming in the future. I've said it a million times on this podcast, and this is teed up. So what I'm hearing is, if I'm a listener right now, and I maybe sell something, seed or chemical or whatnot, you have a product that's almost like a CRM. So almost like a contact resource management to help me be more efficient, reminders, tell me, I can look back in it and say, this guy spent this much money last year, this guy ordered this much seed. And it helps me, you made this comment, more customers more efficiently. So it helps me as that ag retailer do more efficiency and do a better job for my customer. In the back end of that, though, you're collecting the data. And that data, if you're not paying attention here, that data is going to make you more efficient in the future, because I don't remember everybody's name, let alone what variety of seed they bought last year. This makes me look like a genius when I open it up and boom, there it was. Oh yeah, hey Tanner, I remember that you ordered what was it last year this much?
Right, exactly.
And all of a sudden, I become a better salesperson for you because I have some technology helping me, and that technology is what we're talking about today. Technology is growers.
Yep, you totally nailed it. And like what the really cool thing about that example is that one, we refer to it internally as a CRM or a grower relationship management platform, but it's like, because we've approached this through the lens of, kind of been there, done that in agriculture, it cuts out all of the fluff and the chaos of traditional CRM platforms, because nobody, especially in this space, has the time actually to sit there and punch in a bunch of numbers and do a bunch of complicated calculations and check a bunch of boxes. And so given our knowledge of just how short-staffed and under-pressured and time-sensitive everything is in agriculture, we really built that into the product to make it a heck of a lot more efficient. And the analogy that you gave about, remembering what you did last year and then applying that next year is huge, because if you can save that information, what we find when looking at the data is that like 85% of the time, like chemistry programs, for instance, fortunately or unfortunately, we could argue that, don't change that much, right? And so like they do the same thing year after year after year. Well, if I have that information, with the tap of a button, I can apply that and resell it or reposition it at least next year. So what that means is I did about 85 to 90% less work, every year after, to ultimately get likely the same result. And that's something that's really,
you can service more customers. So one more question before we let you go. Any CRM takes a lot of data input on the front end. So I have all my customers, Tanner, that I know that I service. I have hundreds and hundreds of people in my sector that I have in my little black book. Who puts all this stuff into your software? Do I have to do that as the ag retailer, or are you guys going to assist me in that? I'm not too tech savvy.
Yeah, no, it's a great question, and it's not a unique problem. And so the answer is we will 100% assist our customers in doing that. We're fully on board to take on that burden initially and get everybody set up and organized, because that's just part of doing business, and we love being able to support our customers in that way. But we've also made it easy with some bulk uploads and bulk import templates and export templates for the retailers that want to take more control of that process. It's extremely simple process to do that as well, because the pain point that you just articulated is a real one. And again, nobody in this space has any time seemingly to sit behind a computer and use software. So all of that's taken into consideration, and that's what we're really proud about and excited to get this in more people's hands here in 2022.
I think so. We recorded this the day before Thanksgiving, and I think I had 3 or 4 phone calls alone today, and people said the exact same thing. There's not enough time. But if you are an ag retailer, you can acquire and manage more customers more efficiently with Growers Rally products. So go check out Growers at growers.ag. Steve or Steven, thank you so much for joining us. We really appreciate you jumping on here before your holiday starts, and I can't wait to have people reach out to you and let you know what they think of your product.
Yeah, no, likewise. It's been a blessing to be on the show, and I really appreciate and love what you guys are doing. So good luck with everything, and enjoy the holiday.
Yeah, congratulations on the release. And listeners, that was our What's Working in Ag segment. We have proud partners on our podcast, and here is a quick message from one of those. They're minimizing risks on your farm, helping you improve your yields, and increasing your profit margins. In today's farming operations, the data is the key to achieving all of this, Dave.
It's no secret that data has been helping more and more farmers gain ground in their operation. And there's no better way to manage all of that data than through John Deere's Operations Center. As a leading farm management platform, John Deere is constantly and continuously fine-tuning the features in Operations Center to make it easier, faster for you to analyze all of that farm data.
Yeah, and within that Operations Center, you can collect and analyze all of your machine, field, and crop data year after year, so you can make those data-driven decisions for your operation. You can set up field instructions for your machine operators, then push those instructions directly to that in-cab display straight from that Operations Center. Then your operators don't have to enter this information when they get to the field.
That is so cool. And with near real-time monitoring with the Operations Center, you can track the machine performance, the field work, and stay ahead of all the logistics to ensure the right work is being done at the right time. With all that yield data in Operations Center, you can analyze your total farm operations performance and make any changes for an even better next year.
And John Deere continues to make their Operations Centers your go-to place to gain ground in your operation. It's free to use. Just create an account at operationscenter.deere.com or download the mobile apps from the Apple app or Google Play stores. You can also see your local John Deere dealer for more information. Thank you to John Deere for being a proud partner of the Farm for Profit podcast.
All right, Tanner. And now this week, let's move to our main topic. And our main topic is going to be taxes, something all farmers have to deal with and love, or love to hate, or hate to love.
Exactly. And we are sticking with this tradition. We've done one of these every December since this podcast has started because we think it's a really important topic, and you listeners continue to suggest that. But we have an extreme expert with us today. So our guest is Roger McEowen. He's a professor of agricultural law and taxation at Washburn University School of Law in Topeka, Kansas. He's also an extension specialist at Kansas State University. Through 2015, he was the Leonard Dolezal Professor at Agricultural Law at Iowa State University, where he also was the director of the Center for Ag Law and Taxation called CALT. So that's a close to home connection for our guest here in the podcast. He conducts approximately 80 to 100 seminars annually across the United States, also has a couple of radio programs, and can be seen talking about ag law and tax topics on RFDTV. So he might be a familiar name and face to you guys listeners. Welcome, Roger.
Good to be with you, Tanner. Thank you.
So, Roger, tell me a little bit of, we learned your professional resume. What's your agriculture background a little bit?
Well, I grew up on a family farm in northeastern Indiana that's still operated by my family. I'm the one that moved away to go to college, and then they kind of never went back to it to be involved in the production aspect of it. But in the northeastern corner of Indiana, in that snow belt area, and they already have snow this year. And I talked to my brother on the farm over the weekend when it was 73 degrees here in Kansas, and he said it was about 29 in snow there. So when you were watching those football games from Ann Arbor and Lansing over the weekend in the snow, it was 72, 73 degrees here. So I don't feel bad about that.
No, it sounds like you made the right choice. But let's jump right into the topics for the day. What is the first big hitter that comes to mind for ag law and taxation that is either in the news or on your mind today, Roger?
Well, if we break it out into tax separately from the legal front, of course, the legal front has been heavily influenced by environmental issues in recent years, and wetlands and the Clean Water Rule, and Trump coming in and rescinding the Obama rule and putting their own water protection rule in, and now the Biden administration coming in and basically putting on hold the Trump rule while they write their new rule, and that's been in and out of the courts for the past decade. In terms of what is a jurisdictional water of the United States. And then, of course, the other concern farmers have related to that would deal with wetlands under the farm programs, the Swamp Buster program. So that's been huge the past decade. And really the issues from a legal standpoint for agriculture vary depending on where you're at in the country. If you're out west, the water issues are huge. Bankruptcy is a cyclical issue. Depending on the farm economy at the particular time. And so we've kind of cycled through bankruptcy. And of course, Chapter 12, the last 15, 16 years has been big because of the revisions to legislatively and statutorily to Chapter 12 I was involved in a rewrite of it in 2005 to make not only Chapter 12 permanent, but also put a tax provision in there that allows a farmer to deprioritize taxes, which is a very important provision. For those, you're based there in Iowa. Iowa was hit pretty hard in the farm crisis in the 80s. And one of the problems was when a farmer tried to downsize their operation, they would trigger a bunch of recapture tax when they try to sell off a line of equipment to pay a creditor off. And so there were numerous cases where a farmer got bounced out of a reorganization and into liquidation simply because they couldn't pay the tax bill. Well, that got corrected in 2005, and then we made a tweak to that in 2017 to deal with a timing issue. And that issue went all the way to the U.S. Supreme Court, and I was involved in that Hall case that the U.S. Supreme Court heard that came out of Arizona a number of years ago. So that's been a big issue. So the water issues out west, Bureau of Land Management, federal grazing rights out west, bankruptcy issues, cyclical, wetlands, swamp buster, and then you get the routine lease issues, fence issues, all types of easement issues, pipelines and wind energy easements, and those are constant all over the place.
Right.
So that's just on the legal side of things.
Yeah.
Let me dive into a couple of those rather than just pass them over. So wetlands, we'll revisit that. I don't think any of our listeners want to go bankrupt, so the Chapter 12 might be out of their deal. But the one that you mentioned besides that was recapture tax. We do have people that listen that might be the next generation of farmers coming up, and their dads might want to retire, grandpas might retire. So you said it was changed in 2005 and then again later. What does that look like today, or what does that tax implication look like for our blue-collar farmers today? Has it helped where it's at versus where it's been in the past, or is it still arduous?
No, it's very helpful, but I would say up front, a farmer that's going to go through a Chapter 12 better have a good farm bankruptcy attorney that also understands the tax rules associated with Chapter 12 and farm income tax in general. Actually, the very first case testing that new provision came out of Iowa, out of Marshall County, Iowa, as a hog farmer. And we got a very good resolution out of the 8th Circuit on that. And then, of course, IRS kept picking at the corners on that and kind of eroded some of the benefit until we got the 2017 legislative change. But to be able to move IRS from a first priority provision saying you have to pay the taxes incurred on the sale of your farm assets first before you can pay any other creditors, and move them to the back of the line and put them on par with all other general unsecured creditors is huge, and it's massive. And frankly, Senator Grassley out of Iowa was instrumental in getting that through the Congress at the time because he knows the politics of it. I was one of the drafters of that and had numbers of meetings with he and his staff. And he came up with the idea that, if we run this through House Ways and Means Committee and the Senate Finance Committee, the IRS sits perched on those committees and they're going to see this and they're going to object and get it struck. And so what the senator's idea was, since he was at that time chair of the Judiciary Committee, that we could run this through the Judiciary Committee as part of the bankruptcy bill and sneak a tax provision in that way, and they wouldn't see it. And it would become law before they would notice it, and he was exactly right. So thanks to Senator Grassley and the political moves, which I don't pay attention to that, but he's been around long enough. He knows all the process, and actually that got in through the Judiciary Committee because of him.
Okay, so let's bounce out of bankruptcy, because just to clarify for listeners, that is what we were just discussing is in a Chapter 12 bankruptcy filing. So now let's look at the tax for kind of what's been a buzzword on transfer tax and recapture tax. I'm probably using the wrong word, recapture, in this sense, for an active farm just trying to limit their tax liability come the end of the year. What's that look like now outside of bankruptcy?
Well, 21's been a pretty good year nationwide, particularly in the crops side of things. Not so much in the beef cattle industry, although there are aspects that have been profitable, but we've had good prices and we've had good yields this year. And so after a number of years from the trough in about 13, 14, 15, things have improved. And so 21 was a good year. And so we're looking at the typical techniques of deferring income under deferred payment grain contracts, accelerating expenses into this year by prepaying those expenses, And there are certain rules we can do that, including the use of income averaging by farmers. So there are a number of those techniques that we can use to smooth that income out from year to year in anticipation of what next year might be and what the previous year has been. So those standard techniques are still there. And of course, everybody's eye the past year since January has been on, well, what's the Congress going to do with the tax rules? Particularly not just the income tax side of things, but also the transfer tax system, the estate tax system, the gift tax system. What are the rules going to be with respect to trust? What are the rules going to be with respect to income tax basis at death? What's the exemption going to be of the federal estate tax, unified credit exemption? Those have been the big concerns that I get hammered with questions from farmers on a daily basis. And finally, we may have a little bit of an inkling as to what might happen with respect to that. But our standard tax techniques are really in vogue right now.
Let's jump into a couple of those.
Yeah,
So
I know, let's
I know
granular.
we were at 11.7 or 11.9 million on the inheritance
11.7.
tax, 11.7. That's been threatened by our administration currently. Nothing's official yet, but what do you see in there? Just give us your crystal ball of what might happen with that. I was hearing they're going to lower that to 5.7, somewhere there.
Well, that was the talk. I keynoted a major farm conference in Iowa City, Iowa back in June, and then was asked by the magazine that was publishing did an article, a follow-up detailed article with me on that. They wanted me to put percentages to all of these things that might change. And we got to the estate tax, and I said, less than 10% chance that's going to come down. And they couldn't
really?
believe it.
Okay.
Lo and behold, actually fumbled my way into a correct answer, it looks like, on that one, because the proposed reduction, which was in the Bernie Sanders proposal, did not make it into the House bill that passed on November 19. So they didn't touch anything with respect to the estate tax. So we still get the full exemption. It's going to go to 12.06 million in 2022. They didn't mess with the gift tax side of things. They didn't change the rates. They didn't increase the tax rates on estates or gifts. And they didn't change the basis rule. And that's monumental. And that agriculture just breathed a huge sigh of relief, because I think there's less than zero chance that the Senate puts that stuff back in. That's not going to happen.
And basis rule, you're talking stepped up basis when passing farms, correct?
Yes, exactly.
Okay.
You get a basis equal to the fair market value of that property at date of death in the hands of the heirs. That's absolutely critical to every single farmer and rancher out there, even though the estate tax is not that big of an issue for very many, particularly when your exemption is 12 million. But basis is an issue for everybody, and we get to retain that basis. They're not going to change that rule. So that's huge. It's very important.
So you said you feel like there's a 0% chance the Senate's going to put it back in. What is the chance that it gets taken back up in 2022 and rebrought as either a part of another bill or standalone?
In 2022, in an election year, 0.
I was hoping you would
I don't
say
think it's
that.
going to happen. Yeah, the other thing I said at that conference in June was, if nothing happens by the end of December, it's not going to happen. They are not going to do this in 2022 in an election year. I just can't see that happening at all. So it's either going to happen right now or it's not, and it's currently not in the bill, and I don't think the Senate's going to put it back in.
So, Roger, I don't keep up with this enough as I should. When is it official that changes are not going to be made? You're sounding like these changes have already been made. Is that like official that it's already hit the Senate, it was shot down, or is there still stuff in the works?
Yeah, well, it's still in the works. What I'm talking about is the bill that passed the House, that the House voted on and passed on November 19. And these provisions were not in there. They were stripped out.
Okay.
So the bill that they sent to the Senate does not contain these things involving any of the proposed estate tax changes. They were stripped out. And what I'm saying is there's 0 chance the Senate's going to put them back in.
So to farmers listening, we just unpacked a whole lot of stuff there. I'm going to recap just a little bit that basically this year for upcoming changes, we're thinking there's minimal changes. So in terms of if you're thinking of selling, your estate tax is probably going to stay at that 11.9 to 12.02 million. So no change. Basis, where if you were going to retire and your kid or you passed away, your kids would get stepped up basis, not retire. But if you passed away, the kids, the inheritors of that, the beneficiaries would get stepped up basis. Doesn't look like that's on the table. What about like a 179 deduction for farmers? A lot of our farmers do that for equipment, or even the 1031. Let's pack the 179. I know a lot of people are using that.
Yeah, no changes on 179. That wasn't even discussed. No changes on bonus depreciation. Now, what you do have to watch is at the state level, some of the states don't follow the federal rules.
Yep.
They have their own rules at the state level. And so that's just something quirky that you have to watch on a state by state basis. Now, Iowa has changed theirs. They have slowly gotten into conformity with the federal rules. There was nonconformity there. You can still take, now it may not be a good tax strategy to take a whole lot of depreciation on your equipment or entirely depreciate it out in year one. That can come back to bite you. But those provisions have not changed. They're still going to be there.
Yeah, so bankers have a love-hate relationship with the Section 179 deduction.
Well, let's pretend for a second. Let's just give a real-life example. So 2020, we had COVID. We had some MFP money come out, Market Facilitation Program. We had some PPP money come out. Government assisted some farmers, and let's pretend for a second, Tanner, you farm 5,000 acres. Maybe you got a check for $250,000 or $500,000.
Well, that was capped. Yep.
Between that, somewhere in there, and then we had a really good corn year, okay, and crops were better than anticipated. So now we have a little bit of liquidity sitting in our pockets, and we need to write that off somehow. Is this the year to do that, Tanner? You said you have a love-hate relationship with that, but
yeah, for the banking side, I don't like borrowing to get a deduction. If there's cash, if you're sitting on liquidity and you use it for an acquisition that's going to either continue to generate or save money, generate more income or save money on your farm, I have no problem with it. I just don't like coupling debt with a deduction.
Gotcha.
Yeah.
Roger, any follow-up on that? Do you think any difference in that scenario?
No, I agree with that. The tempting thing, however, that you find farmers thinking about right now and some doing is with the level of inflation that's in the economy and where we're headed with that. Should I be borrowing right now at historic low interest rates, locking in that rate, and then paying back the bank with inflated dollars that aren't worth as much? I know the bankers don't like to hear that, but that is a strategy that's out there. Yeah, just borrow, get my rate fixed in, and then pay the bank back with worthless dollars. Let them deal with it. Now, I would caution farmers in doing that because if we want to get into an economic discussion, I just put a detailed blog article out on the legislation that passed the House that we were talking about, the tax legislation. And the last part of that, I get into the economic problems in the economy right now and where we might be headed. And in some of my tax seminars, I'm doing a comparison with all of the economic charts as to where we were at in the late 1970s and where inflation was at. And of course, then Paul Volcker came in as chairman of the Fed and made that historic statement to the Congress in October of 79 that I'm going to wring inflation out of the economy. Well, what that meant was he's going to jack up interest rates. He's going to increase the cost of money, decrease the supply of it, and wring inflation out. Well, he did. And if you were in Iowa farming at that point in time and didn't have a fixed rate of interest, you got hammered because your collateral values in 18 months went down 50%, your land value, and your interest rates went way up on you, and that created a crisis. But he got rid of inflation. Now, the problem I see, and when you talk about these lending strategies, you're exactly right. You want to borrow money for the right purpose, and that's to generate additional money and pay off some other high interest loans, for example, consolidate some of those loans. But where we might be headed is something similar to the late 1970s, because we've got historic levels now of inflation in the economy. I do not understand the Fed policy right now. It makes no sense to me. There is absolutely no reason to have interest rates near zero. And if you remember the last crisis we went through, they steadily increased it a quarter point, didn't squelch off the economy, but kept inflation in check. They're not doing that right now.
Right.
And we have a massive increase over the last 20 months in the M1, the money one supply in the country. We have way too much money that's out there. And we've got wage inflation. We have price inflation because of policies that have been put in place that have increased the price of fossil fuels, which increases transportation costs, it increases production costs, and it gets baked into the cost of every single good that's out there. So that's a bad policy that's out there. So we've got price inflation, we've got wage inflation, we've got excess demand by deficit spending, and we just got a horrible mix of economic stuff. So from a farmer standpoint, what I'm telling farmers and their attorneys and their CPAs at my conferences, and I just did this last night to about 500 of them, and I'll be in Des Moines coming up for about 600 attorneys and CPAs. And my message is, you need to study your clients' balance sheets. You need to study their financial ratios. The banker's looking at that, but you need to be aware of it too. When you employ tax strategies on their behalf, you have to take into account where they're at financially and what they might be facing coming up in 2022, because I think, frankly, 2022 is going to be a much rougher year than 21 for many farmers. So it's time to get your house in order and not borrow more, pay off some debt, not be tempted to use low interest rate loans to borrow money. Do some other things with that.
Yeah, there's a lot of opportunity right now for farms. And typically the word restructure is used in a negative fashion, but this is the time to use it in a positive business planning type role. And another way that I would approve a Section 179 expense, Dave, is if it's for a Gearinghoff head. So proud partners of the Farm for Profit podcast. Just don't forget about Gearinghoff, gearinghoff.com. Their heads have the industry leading flex. So both their corn heads and their bean heads, the razors, have max flex range up to 8 feet at times, definitely on the corn side. Don't forget about their new extreme decomposition rolls. Go check out everything that they've got, gearinghoff.com. And that is a Farm for Profit approved Section 179.
There you go.
You like that?
There you go. Roger, I want to dive deeper into this. So I get asked as a realtor all the time, what's going to happen with land prices? So right now in Iowa, we have historically highest land prices I've seen in my career, where I call it inflation. The price of land is up. They all ask, when is it going to go down? When's the price going to go down? And I tell them, well, tell me when a Ford F-150 is going to cost $40,000 again. It doesn't. It's $72,000 now. So I don't necessarily see our land backing up. However, you just alluded to a rougher 2022, and I have guys borrowing and spending enormous amounts of cash to buy farmland right now, hedging against the future, that they have it. Expand a little on your 2022 prediction there that it might be rougher. Give me a little background of why you're thinking it might be rougher and get our house in order.
If you look at the comparison to the late 1970s, I think we're sitting at probably about October, November, December of 1978 right now. Volcker came in with the change in Fed policy in October of 79, and that was the peak of the inflation in the economy, and he's really squelched it out starting in 80, basically, and then 81 and 82 and 83. That's where the crunch was, and that's when your land values collapsed in Iowa. Now, I'm not saying it's not a perfect parallel, because now lending practices are different. Many farmers have fixed rates instead of variable rates. However, what I am saying is that at some point in time, the Federal Reserve will have to raise interest rates. That will have an impact on the economy. They will at some point in time have to deal with the inflation. And if this current piece of legislation, this Build Back Better law, throws another several trillion deficit spending into the economy, that throws more money in there, and that just pours gas on the inflation fire that's already out there. That will have to be dealt with at some point in time. Now, land buying, you got to look at the difference between short-term and long-term.
Yep. I
agree with the strategy long-term. Sure. That's a pretty good hedge in the long term. Now, in the short term, 2022, 23, maybe 24 could be pretty rough. And you could buy land and then have it go down on you price-wise initially. So you just have to ride that out and continue to do so. But what we're seeing in terms of prices right now, you can't cash flow it. So they're not obviously buying land to start out farming with. It's a piece that they're adding in. I think you just had a record per acre value land sale in Iowa. And it's just ridiculous what some of this is selling for. And it's the same thing in the housing market right now. When the government provides you money to stay at home, and they give you free money, not taxable on top of that, it's done the same thing in the housing market. People are going, well, interest rates are really low. Maybe this is a good time to use that as a down payment on a house. Well, that jacks up the prices because it increases demand, and that's what we've seen. So it's all kind of artificial price increase, and I think we have to understand that. Fueled by politics and an inflationary policy right now. And at some point in time, that's going to taper off. So if you buy the land, pay cash for it, or lock in a very low rate and hold it. Hold it for a long time.
We did an episode where Dave gave us an update on what the market is. It was interesting to learn what buyers are telling him as to why they purchased and what sellers are telling him as to why they sold. So we're not going to dive into that, but go back and listen to that episode, listeners, if you are curious. Let's hit a couple of small things that I've read about this year, just some quick little topics. I'll get your feedback. Our listeners probably had PPP loans or EIDL loans, and this is probably the year in which forgiveness is being granted. How are those considered tax-wise?
Well, we initially had the legislation that came through that said, well, you can't get a double tax benefit on those. If they're going to be forgiven and you don't have to report them in income, you can't deduct the associated expenses you paid with getting the loan. That got corrected in December of 2020 in the Consolidated Appropriations Act, where Congress said, well, our intent was that there would be no tax detriment. So they wanted a so-called double benefit. In other words, if you're going to get the tax exempt income, you can deduct the associated business expenses you're paying with that PPP loan. So it's a total freebie, is what they were saying. So that was corrected last year. And so the forgiveness that's coming off this year, we don't report that into income.
Okay, good. Some of my customers and some of Dave's investors have CRP income on land that they own. And I thought I read somewhere that might now be subject to self-employment tax. Is that accurate?
Well, it's interesting you would raise that. I just finished in November a 3-part series on the self-employment tax treatment of CRP rental payments. The Pub 225, which is the Farmer's Tax Guide, I was actually doing a seminar, and at a break, I grabbed a copy. They had it there of the 2021 Farmer's Tax Guide, and I flipped to page 11 in the lower right-hand column. And there's that statement by the IRS that said you have to report all your CRP payments on Schedule F unless you're receiving Social Security or disability benefits. And that's flat out incorrect. I was involved in fact, wrote the brief in the 8th Circuit case where we defeated the IRS on that argument. And that is not correct. And that's the reason I did that 3-part series, was to push back on the IRS. Not all CRP payments are subject to SE tax. If you're an active farmer and you take some of your land and you bid it into the CRP, but you're farming your other land, yes, the CRP rents are subject to SE tax, because had you not put it in the CRP, you would have farmed it and been Schedule F income. But if you're not an active farmer and you just have land that you happen to enroll in the CRP rather than cash leasing it out to somebody else, and you don't have other Schedule F income, your CRP rental income is rents. And rents from real estate are an exception to the rule of inclusion of earnings from self-employment. It's not subject to self-employment tax. I would even argue that if I'm a farmer and I've got land in Iowa, and I also own some ground out in Colorado that I use to hunt, and I put that ground in the CRP, that rental income is also not subject to SE tax because there's no connection with my farming operation in Iowa. I didn't just take some of my farm and put it in the CRP and continue to farm the other. I've got 2 separate tracks.
I got you.
So, IRS continues this line, however, in their publications that all CRP rental income is subject to SE tax. It's just flat out wrong.
All right, I got 2 more quick ones. This one I know the least amount, and I don't even know if I'm going to be spot on with it. There's a lot of farms in our area that will provide meals during planting and harvest season. And I thought I read somewhere that they might be jeopardized as a deduction because of a per diem or a max amount that limits how much you can deduct for meals and entertainment.
Well, let me unwind that a little bit for you. You're pretty close to right on track here. TCJA, the Tax Cuts and Jobs Act, which went into effect for most of the provisions starting in January 1 of 2018, changed the meal deduction rule to 50%. We used to get 100% deduction on those types of meals, and it's basically a 50% rule. Now, there are exceptions to this, but basically we took a 100% rule, cut it to 50%, then we're going to phase it out over a number of years. We'd always thought that the per diem, if you're providing meals on a per diem basis, reimbursement on a per diem basis, it was caught by the same cut down. And the IRS, just within the past couple of weeks in November, said, no, So that's a big one for farmers and ranchers. The per diem rule is not caught by that. So we can take 100% of our per diem meals and write those off. That's a biggie. I did not anticipate that. That's not the way intuitively the statute reads to me. Hey, but we'll take it.
Yeah, no kidding. And the last one, Dave, before you can change topics on us, is the child tax credit checks that our listeners have been receiving. I'm not even going to attempt to assume an outcome. So how is that working? Is that just you're getting your deduction ahead of time? It's going to be income. Yeah. How's that going to work?
Yeah, they front loaded the child tax credit payments instead of claiming it on your tax return and getting a portion of that refundable if your income's below a certain threshold. And then the government would write you a check. What they started back in, I believe it was July, was you would estimate what your child tax credit would be for the year and then divide by 12, and the IRS would send you a check for that amount every month. Now, interestingly, in the bill that just passed the House, the Build Back Better bill that goes to the Senate, a provision is in there that will terminate those advance payments. So we would be back to, I think after one more year, elimination of those monthly payments, and then the computation would be done on the return. You'd claim the credit on the return.
That no longer can be a deduction. So there's a chance that our income tax bill could be higher this year because of that.
Well, they're not eliminating it. In fact, they did loosen up some of the rules. All they're doing is another year down the road, they will eliminate the advance payments. Okay. And so then you would take your entire credit when you file the return and you get it back that way. So they're not eliminating it. In fact, they made some changes to the age limit. They moved it to 18. Kid has to be under 18 instead of under 17. And change some of the amounts. But that's really been loosened up in recent years. So I guess they're incentivizing you to have Tanner go out and have more children.
Yeah, no kidding.
There you go.
There you go, Dave. I'm done monopolizing this for a little bit.
All right. I like quick tips there, Roger. Sometimes the policy gets confusing to me. What are the best quick tips you have for farmers when it comes to taxes that they should implement or be asking their tax professional? They're not going to learn all this. They have CPA or whatnot. So what should they be asking this year that maybe they didn't ask in a previous year? Like switch to an LLP, switch to an S Corp. Yep. Are we doing this right? What suggestions do you have or bullet points that our listeners might take out?
Well, let me start with one, and I kind of, of course, tongue in cheek said this to a lot of people that were concerned about the estate tax changes and the drop in the exemption, and when it looked like they were fearing that would happen. Well, my tongue in cheek comment was, just die this year, then you don't have to worry about it. So you don't have to die this year now. I want to make that clear. They're not going to change those rules, but and they didn't change the QBI deduction either. This gets to your question. So that 20% deduction is still there for pass-through entities and sole proprietors, and the corporate tax rate stays at a flat 21%. So our matrix for making decisions on the structure of entity that we want to be in doesn't change from where we were at when TCJA went into place in 2018. That's the point in time when people started to consider, well, if I'm in a corporation, I get a 21% flat rate. And for a lot of farmers, however, that's really amounted to about a 40% tax increase. And they didn't understand that until I would explain it to them. And I said, look, tell me what your rate is that you're paying through your corporation. And they would think that through. And basically because of tax planning, we could set the income level such that you were automatically taxed at the maximum 15% bracket. We would fill that up and keep your income by various tax strategies, including 179 and bonus depreciation and the amount of compensation that's paid to the owner. We'd keep it at the top end of that 15% bracket. Well, when the corporate tax rate went to a flat 21%, people were looking at that as a cut. And what I would tell a lot of farmers is what you're trading then is 15% for 21%. That's really about a 40% tax increase. So that really got them thinking, oh, maybe I don't want to change from a corporation. But then on the other side, if I'm a pass-through entity such as an S corporation or a partnership, then I get a QBI deduction worth 20% on my business income, plus what a co-op passes through to me in relation to my patronage. That I can take and count, paste that in together with my QBID and get an overall cubit that's pretty beneficial. They didn't change any of those rules.
Expand
So really,
QBI for some of our listeners. So just go a little deeper in QBI.
Yeah, Congress, with the Tax Cuts and Jobs Act, came up with the idea of, well, if we're going to cut the corporate tax rate, we need to give a benefit for non-corporate taxpayers, including sole proprietors. And so they came up with this thing called the Qualified Business Income Deduction, which allows you to claim a 20% deduction on your business income. So it takes basically a 25% rate and cuts it by 20%. So you're down to about 21% right there. And that gets you on par with C corporations. So that's the basic theory behind it. But, there's more than just, and I would emphasize this to farmers that are listening, there's more to entity structuring and than just interest or just tax rate. We want to think about our overall goals of estate planning, transition planning, business planning, how we want to move the operation into the next generation. And also, when you talk to farm clients, you have to factor in federal farm program. And if they're large enough so that they could pick off more than $125,000 of payment limits, then you want to be a general partnership, at least at the operational level, and then have your owners of the partnership hold their partnership interests in some type of limited liability entity. Now, that might be an LLC or an S Corp or something like that. Now, the one other thing I would mention, again, specifically related to your question, in the Build Back Better law that is now in the hands of the Senate, they did leave a provision in there that would apply the net investment income tax to trade or business income. Now, translating that, what that means is that if I'm generating income over $400,000 or $500,000 on a married filing joint return in my S corporation, then my trade or business income now gets hit with an additional 3.8% tax. That's a nasty one. And I think that'll cause some people to reevaluate whether they should be in an S corporation, because a lot of times we form S corporations to minimize Social Security tax. I do that myself, pay myself what is known as reasonable compensation, and then the balance that is beneath the Social Security base, I don't pay any Social Security tax on that. So I'm saving $10,000 to $12,000 in Social Security tax every year. Well, once your income gets up above $400,000, $500,000 in your S corp, you're not going to be able to do that anymore. And that is in the bill that's before the Senate. I don't know if they'll take that out. I think there's probably a likelihood that'll stay. So for some, that's going to cause a reevaluation of whether we should be an S corporation.
We had one of our listeners, Jacob Gentry, email us asking about that. Him and his brother are fourth generation Kansas farmers and wanted to know about different possibilities for how they could structure it to transition their farm. And I've been struggling for a long time on a way to put an entire episode together for this. And I feel like they just need to find a trusted advisor, or even maybe send Roger an email or reach out for direction to hit your unique option.
Yeah, I think every scenario is different, because I ask my tax preparer every year, hey, are we to the point we need to move to this? Should we be tax? I mean, just ask the questions, I think.
Right.
And that's kind of our bullet point topics here. What other nuggets do you got, Roger, that farmers should look at, maybe commodities-wise, selling something? Do they have anything they should be looking for? Tax-wise, sell it now, sell it later, hold it. Any thoughts or other nuggets?
Again, it depends on a farmer by farmer basis. Not every situation is the same. It really depends on what price you locked in at, where you think the market is going, what your commodity strategy is with respect to contracts. How active are you in using the commodity markets to hedge? It just really depends. I can't give you a blanket answer on that.
So we ask all of our guests before we end what the most successful farmers they know all have in common. So we get answers like traits, skills, that kind of thing. It could even be related to what tax practices you see. So I'll let you think on that one for a little bit. But I know when presenters give presentations, they always close with a statement or a comment related to the environment that we're in. What are you using right now as you wrap up presentations as your closer?
Little to zero debt. And if you go back into the 1980s wiped out a lot of good managerial farmers. They were really good managers, really successful farmers, but they had too much debt. They got wiped out. They got took out with the ones that weren't as good at managing their business. So I would say watch those debt levels, watch your working capital levels, your debt to asset ratios. When you start eroding your working capital to pay off creditors, you got some issues there. And so we always want to, as practitioners, we want to help clients identify areas of concern before we get into those areas. And you got to watch the cash flow. You got to watch the working capital, the return on that capital. Those are absolutely critical. And I think those are going to be absolutely critical as we go into 2022. And then employ good tax strategies. Don't get necessarily over aggressive on depreciation. I'm not a fan of going head over heels on bonus depreciation or on expense method depreciation, but there's a role for it. Just enter into it with an understanding of what the potential problems can be if you claim too much depreciation and then things change and you need to sell some assets. And then you're going to end up with a bunch of income tax at ordinary rates, and that's not a good thing.
Tanner, I think everybody needs to have that trusted advisor. I'm sitting here thinking, how many of your clients come in and say, well, I'm worried about my debt to income ratio? Or how many of them say, hey, our general operating budget is being used towards capital expenditures this year versus, I mean, how many guys actually talk that way when they come to use a banker?
So I don't think it's truly them using that language, but I will tell you the best ones that I have are asking questions that are alluding to those issues.
Okay.
Exactly.
How are things doing? They're might not be using the word liquidity or working capital, but they are concerned about their cash reserves. They are concerned about their cash flow projections and what a sale might do, positive or negative. So it's in there. It just might not be the actual finance terminology that.
Fair enough.
Using.
One thing, Roger, we didn't touch on yet is Section 1031. So I have a lot of farmers that'll move trade ground because of Section 1031. Lots of that in the news as well. Do you have any thoughts on that or follow up on Section 1031 and where we're going with that? It's been around for a long time.
Well, it looks like we're safe for the time being. Of course, what TCJA did was remove 1031 like-kind exchange rule with respect to personal property. So they removed it with respect to trading tractors and combines and so forth, but left it with respect to real estate. Now, initially, I'll tell you, I had to do a lot of education to farmers and others because they were really concerned about that. I can't, it's going to cost me more to trade tractors and combines. And the answer is no, because it'll go to what's known as the Form 4797 and your self-employment tax drops out.
Right.
So you actually ended up better by wiping out the self-employment tax in most situations. Now, in the current bill, that Build Back Better bill, there is no provision to remove 1031 for real estate exchanges, which had been talked about. That was put on the cutting floor. So that's not in the bill that the Senate is considering. I can't fathom that they would put it back in.
Have you heard that the rates are going to go up at all on just capital gains rate? I've heard allusions that it would go, right now we're at 15% federally with the net investment tax at 3.8. And then it could potentially go up. I was hearing about 10 more points. So about 28% or somewhere in there. Have you heard any projections?
That didn't make it in the bill either that the House voted on. So that got dropped and remember, there are stages to the capital gain rate. You can have some capital gains that are still taxed at a 0% rate based on your income. And then 15, and then 20 is the top end. And then the passive gains are taxed at an additional 3.8. So your maximum could be 23.8 in the right or wrong situation. That structure is still going to stay there. That the proposal to increase capital gain rates, which they would have taken it to 25%. Did not make it in.
It didn't. So okay, that's news to me.
Good.
Awesome.
All right. Well, I'm going to summarize just to stall a little bit longer for that question about what the most successful farmers or clients or people that you network with have in common. And I'm going to start off by saying a topic that's not usually fun to talk about had a lot of good news for farmers in 2021. A lot of things in our favor, a lot of things extended based upon the headlines that we started the year off with. So we still have higher limits on estate tax transfer for exemptions. We still have the ability to use our Section 179 deductions, our 1031 exchanges, not for equipment, but for real estate parcels. We know that we've gotten the full benefit out of our PPP loans. We also know that these checks that we've been getting for our kids are just part of the normal plan. It's just structured a little bit differently. We do know that it seems like going into an election year that we probably won't see a lot of substantial changes coming in 2022. So positive news on the front for farmers and those in ag-related businesses based upon how bills have been structured and pieces that have been omitted. We are still going to continue to battle, I'm just going to call it the general population. That's what your water quality issues, your inflationary problems, the situations to where we as agriculture as a minority need to rely heavily on our lobbyists and those working in our favor to really make sure that we continue to battle and not let things slip by, whether it's air quality, water quality,
Wetlands,
energy,
manure management.
Correct. Yep. So just things to really focus on. And just remember that this is the best time for a trusted advisor. You are armed with some information in this podcast. Take the little bit, and if you don't understand, ask somebody who knows and understand.
And I'm going to give this week's challenge out, and that challenge would be in volatile times. And I'm going to say it's volatile now because we're seeing inflation and things moving. Some things moving and some people not moving, if it's government and how we're going to control that. Small decisions make big action down the road, Tanner. So be cognizant that the future could change very quickly. So my challenge is be cognizant, watch your balance sheet, prepare or hedge. If everybody's hedging against inflation, hedge for the future. Whatever that looks like to you,
right.
Make sure that it looks right for you for the future. With that, Roger, our question we ask every guest is, what do the most successful farmers, clients have in common? What trait do they have? What have you seen?
Well, I would say the most successful ones are engaged with their business. They're engaged with thought process concerning their estate plan, their succession plan. They're proactive in taking steps along the way to put a plan in process. And that includes tax planning, that includes business planning, the structure of the operation, the estate plan. And they tweak it as time goes by, and they are routinely committed to reevaluating on a periodic basis, whether that's a year or every other year. There is that commitment to do that. And those are the successful ones. And they have more success overall, and from a managerial standpoint, from a business planning standpoint, than those that simply, and it's not a bad thing. They just get up in the morning, they go out and they farm, they go feed cattle. And a lot of times I will get the calls from the farm wife wondering if they're doing the right thing, because the husband in this situation, who's the farmer, and that's not always the case. Sometimes it's reversed, but you've got one spouse that's keeping the books,
right?
And they're seeing some fissures, and they can't get their other spouse to talk to them. So the successful ones are good communicators, within the family, with their professionals that can help them. They express their concerns, they ask questions, and they work with the process all the way through, and they continue to monitor things. And that's just across the board. Those are the successful ones.
I like that. I like that answer a lot. And a lot of the successful ones are listeners to the Farm for Profit podcast. So thank you again, listeners, for joining in. Roger, I know we're going to have follow-up questions. Are you okay giving out some contact information that they might be able to send them your way, or would you like us to play?
No, that's fine. I'm easy to find. I also have a daily nationally syndicated radio show, so people are hearing me all over the country with an audience. Right now, we're about 3 million a day, plus Sirius XM every day.
We got a little work on the Farm for Profit podcast. We need 3 million a day.
My email is just my first name dot last name, so roger.mceowen@washburn.edu. I also have a K-State address, but use my law school one. That's the one I consistently monitor every day. And then my website is washburnlaw.edu/Walter, WALTR. They can find my blog there, a whole bunch of information on the website. I do two other, as you mentioned in the open, 2 other radio programs alternating each week. Those are interviews that I do for other stations rather than my daily one that I do myself. that's produced out of Nashville, Tennessee. So all that information is there. They can feel free to contact me. It may take me a while to sort through it. I tell you, when I started that radio program in May, it's just exploded on me. And I told my wife just recently, I said, I think I'm going to have to hire somebody just to monitor my email. So if I don't get back to you within 24 hours, please understand it's buried in a pile of several hundred every day.
And I can vouch he will get back to you. So it will happen. No, but that's...
Yeah, I welcome questions. That's how I learned too, dealing with the questions that people have and, I need to dig into that issue to answer that question. And that helps me because as I go out and do conferences, 80 to 100 coast to coast, I can relay those questions and those answers to the people that I'm trying to teach, and that generates more questions. So I welcome questions. That's a good way.
Awesome.
To help me and hopefully to help the person that's asking the question too.
Well, Roger, we appreciate you answering our questions today. Listeners, we appreciate you sticking around with us. Don't forget about our very generous partners, Outback Wraps, John Deere, and Gearinghoff. Make sure that you reach out to them, let them know that you heard it here on the podcast, and continue to send your ideas and topics to farm4profitllc@gmail.com. Stick with it, continue to work hard, and until next time, we'll see you then.
Remember, if you aren't farming for profit, you won't be farming for long.